Listen, something extraordinary is happening right now in the precious metals market, and if you're stacking silver or gold, the next 72 hours could define your entire position for the next decade. I'm not being dramatic. I'm looking at data that most people won't see for another month, and what I'm seeing is a convergence of factors that happens maybe once every 15 years. Let me paint you a picture of what's unfolding. Right now, as I'm recording this, the silver-to-gold ratio just hit a level we haven't seen since March 2020. You remember March 2020, right? When silver briefly touched $12 and then exploded to $30 within 5 months? That's a 150% move. But here's what's different this time, and why this opportunity might be even bigger. The physical market is completely disconnected from the paper price. I'm talking to dealers who are paying premiums of $6 to $7 over spot for generic silver rounds. Think about that. Spot price says silver is around $31, but you can't actually buy it for that. You're paying $37, $38 in the real world. That spread, that gap between paper and physical, that's not normal market behavior. That's a market under extreme stress. And it's not just retail. The wholesale market is seeing the same thing. I spoke with a distributor yesterday who told me his allocation from the mint got cut by 40% this month. 40%. He's got orders backed up for 6 weeks and he doesn't know when he's getting more product. This is a guy who's been in the business for 30 years, and he said he's never seen supply this tight outside of 2008 and 2011. Now, let me show you what the big money is doing, because this is where it gets really interesting. The latest COT report, the commitment of traders data that shows us what the commercial banks and hedge funds are positioned for, just flashed a signal that's historically been followed by massive price moves. The commercial shorts, the banks that usually suppress price, they've covered more of their short position in the last 3 weeks than any period since 2019. They're getting out of the way. You know what happened after they got out of the way in 2019? Silver went from $14 to $29 in less than a year. And the setup now is even more bullish because we've got something we didn't have then. We've got industrial demand that's absolutely exploding. Solar panel manufacturers are projected to consume 20% more silver this year than last year. 20%. And that's on top of already record consumption. Electric vehicles, each one uses about twice as much silver as a traditional car. 5G infrastructure, every cell tower upgrade requires silver. We're not talking about investment demand here. We're talking about silver that gets used up, consumed, gone forever. And production isn't keeping up. Global silver mine production peaked in 2016. We're producing less silver now than we were 9 years ago, while demand has increased by over 30%. Do the math on that. Every year we're running a deficit of about 200 million ounces. That's being made up by above-ground stocks, existing inventory. But here's the thing about inventory. It eventually runs out. The COMEX, the big commodity exchange in New York where silver futures trade, they've got about 270 million ounces in their registered vaults right now. That sounds like a lot until you realize that's only about 3 months of global industrial demand. 3 months. And it's been declining steadily. In January, they had 340 million ounces. They've lost 70 million ounces in less than a year. Now, I want to tell you a story about what happened in 1980 because there are some eerie parallels to today. Back then, the Hunt brothers tried to corner the silver market. They accumulated over 100 million ounces of physical silver and silver futures contracts. The price went from $6 to $50 in less than a year. Now, I'm not saying we're going to see $50 silver next month, but I am saying that when physical silver gets tight, the price can move faster than almost any other asset. Here's what's different now. In 1980, it was 2 guys. Today, it's millions of retail investors around the world, plus central banks buying gold, plus industrial users scrambling for supply, plus investment funds launching silver ETFs. The pressure is coming from every direction at once. And speaking of central banks, let's talk about what they're doing, because this is the elephant in the room that nobody's discussing. Central banks bought over 1,000 tons of gold last year. That's the second highest annual purchase in history. China, Russia, India, Turkey, they're all accumulating. Why? Because they see what's coming with the dollar. The U.S. national debt just crossed $36 trillion. We're adding $1 trillion of debt every 100 days now. Every 100 days. The interest payments alone are approaching $1 trillion a year. That's more than we spend on defense. And the only way out of this mathematically is inflation. They have to inflate away the debt. There's no other option. When that happens, when the dollar loses purchasing power, hard assets are the only place to hide. And silver? Silver is the most undervalued hard asset on the planet right now. Gold is at $2,650. It's made new all-time highs. Silver is still 50% below its 1980 inflation-adjusted high. 50%. If silver just caught up to where it should be relative to gold historically, we're looking at $60, $70 silver. And if we get the kind of monetary crisis that's brewing, we could see triple digits. Now, here's where this limited time opportunity comes in. Right now, you can still get physical silver. It's expensive. Premiums are high. But it's available. That window is closing. I've watched this movie before. In March 2020, you couldn't buy silver at any price for about 6 weeks. Dealers were sold out. Mints were closed. If you wanted silver, you were out of luck. And by the time supply came back, the price had already doubled. We're heading into that same situation, but this time it might last longer because the supply deficit is structural, not temporary. This isn't a pandemic shutdown that gets fixed in a few months. This is years of underinvestment in mining, years of increasing industrial demand, years of monetary policy that's destroying currency values. This is a perfect storm that's been building for a decade. Let me give you some specific numbers to think about. The average silver mine takes 7 to 10 years to go from discovery to production. Even if companies started massive exploration programs today, we wouldn't see new supply until 2032 at the earliest. Meanwhile, the solar industry alone is projected to need 85% more silver by 2030 than it uses today. Where's that silver going to come from? The only place it can come from is higher prices. Price is the mechanism that rations scarce resources. If there's not enough silver to meet demand at $31, the price has to go higher until demand gets rationed or new supply gets incentivized. Economics 101. And based on the cost curves I'm seeing from mining companies, we need silver above $35 just to make most new projects economically viable, above $40 to really accelerate production. So, we've got a floor under the price from production costs, we've got a ceiling being blown off by industrial demand, and we've got investment demand that hasn't even really started yet. The silver ETFs, the big funds that hold physical silver, they've actually seen outflows this year. Investors have been selling. That's about to reverse hard when people wake up to what's happening. And here's something most people don't know. The silver market is tiny. The entire annual silver market, all the silver mined and recycled in a year, is worth about $30 billion. That's less than the market cap of Chipotle. If even a small fraction of the money sitting in bonds or stocks or real estate decides it wants exposure to silver, there's not enough silver to go around. The price would have to gap up massively just to clear the market. I want to talk about something that's relevant if you're thinking about retirement and wealth preservation, because this ties directly into what we're discussing. If you've got $100,000 or more in traditional retirement accounts, IRAs or 401ks, there's a way to get physical precious metals into those accounts without triggering taxes or penalties. It's called a gold IRA, and I put together a free guide that explains exactly how it works. You'll find it in the description below. It covers the rollover process, the custodian requirements, how the metals are stored, all of it. Worth looking at if you're concerned about protecting your retirement savings from what's coming. All right, back to the opportunity at hand. The technical picture on silver is absolutely screaming right now. We've got a massive cup and handle pattern on the monthly chart that's been forming for 3 years. The handle just completed and we're breaking out. The measured move on that pattern projects to 55. That's not me being optimistic. That's just standard technical analysis based on the pattern dimensions. We've also got a golden cross forming on the weekly chart, where the 50-week moving average is about to cross above the 200-week moving average. Historically, when that happens in silver, we see sustained moves that last 12 to 18 months. The last time it happened was 2010, and silver went from $18 to $48. The time before that was 2003, and silver went from $4.50 to $21 over the next few years. But here's what really has my attention. The gold-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is sitting at 85 to 1 right now. The historical average is 60 to 1. In bull markets for precious metals, it often drops to 40 to 1 or lower. If we just revert to the historical average with gold at current prices, that puts silver at $44. If we get a bull market extreme and hit 40 to 1, that's $66 silver. And those calculations assume gold stays flat. But gold isn't staying flat. Gold is in a raging bull market, making new highs every few weeks. If gold goes to $3,000, which is looking increasingly likely given central bank buying and geopolitical tensions, and the gold-silver ratio normalizes to 60 to 1, you're looking at $50 silver. If it goes to 40 to 1, you're looking at $75 silver. Now, I know some of you are thinking, but silver's been a disappointment for years. Why is this time different? Fair question. Let me tell you why. Every previous silver rally since 2011 has been driven primarily by investment demand. People buying silver as a speculation. And when the speculation cooled off, the price collapsed because there wasn't underlying fundamental demand to support it. This time, we've got industrial demand that's not optional. Solar companies need silver to make panels. They can't just decide not to buy it because the price went up. EV manufacturers need silver for electronics. 5G networks need silver for infrastructure. This demand is inelastic. It has to be met regardless of price. That's a completely different dynamic than we've had in any previous silver rally. On top of that, we've got the monetary situation, which is worse than it's ever been. In 2011, when silver hit $49, the Fed's balance sheet was $2.5 trillion. Today, it's $7.5 trillion. The money supply has exploded. And it's not just the U.S. Every major central bank has been printing money like there's no tomorrow. The Bank of Japan, the European Central Bank, the Bank of England, they've all massively expanded their balance sheets. That money has to go somewhere. For the last few years, it's been inflating stock prices and real estate. But those markets are looking increasingly fragile. The S&P 500 is trading at valuations we've only seen twice before, in 1929 and 2000. Both times, we know what happened next. Real estate is unaffordable for an entire generation. When those bubbles pop, and they will pop, that money is going to flood into hard assets. Gold and silver are the obvious destinations. They're the only assets with no counterparty risk, no default risk, no bankruptcy risk. You hold physical metal, you own it outright. Nobody can print more of it. Nobody can devalue it with a policy decision. It's real, tangible wealth that's been recognized as money for 5,000 years. And here's something that should terrify anyone paying attention. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working on a gold-backed trade currency to bypass the dollar. They've been accumulating gold for years in preparation. If they launch this currency and it gains traction, the demand for dollars globally will collapse. All those dollars that foreign countries hold as reserves will come flooding back to the U.S., causing massive inflation. When that happens, and I'm not saying if, I'm saying when, because this is already in motion, the purchasing power of dollar-denominated assets is going to evaporate. Your savings account, your bonds, your cash, it's all going to lose value rapidly. The only things that will hold value are real assets, land, commodities, precious metals, and of those, silver is the most accessible and most undervalued. Let me tell you about a conversation I had last week with a guy who runs a family office, manages money for ultra-high net worth individuals. He told me they're allocating 15% of portfolios to physical precious metals right now, up from 5% a year ago. These are people with $50 million, $100 million, $500 million in assets. They're not buying silver to make a quick buck. They're buying it because they're genuinely worried about the stability of the financial system. And they're not alone. I'm seeing reports of wealthy families in Asia buying silver by the ton, literally multi-ton purchases of physical silver bars. These people have access to information and analysis that retail investors never see. They're positioning for something big. The smart money is also looking at what happened in other countries that experienced currency crises. In Venezuela, when the bolivar collapsed, People who had gold and silver were able to preserve their wealth and even buy real assets at fire sale prices from people who only had paper money. In Zimbabwe, in Argentina, in Weimar Germany, the same pattern played out. Hard assets protected wealth while paper currency became worthless. I'm not saying the US dollar is going to hyperinflate next month, but I am saying the trajectory we're on is unsustainable. You can't run trillion-dollar deficits forever. You can't print unlimited money without consequences. And when those consequences arrive, it's going to happen faster than anyone expects. That's how currency crises work. They build slowly, then collapse suddenly. The opportunity right now is that most people don't see this coming. Silver is still cheap. It's still available. You can still build a position before the crowd wakes up. But that window is measured in weeks, maybe months, not years. Once the momentum starts, once the price starts moving and the mainstream media starts covering it, it'll be too late to get in at reasonable prices. I want you to think about the risk-reward here. If I'm wrong, if silver just sits at $31 for the next 5 years, what have you lost? The premium you paid may be 20% over spot. That's your downside. But if I'm right, if we see $50, $60, $70 silver in the next 18 to 24 months, you're looking at double or triple your money. And if we get a real monetary crisis and silver goes to triple digits, you're looking at life-changing returns. That's an asymmetric bet. Limited downside, massive upside. And you're not betting on some speculative tech stock or cryptocurrency. You're buying a physical asset that's been valuable for thousands of years and has industrial uses that are only growing. Even in a worst-case scenario, silver has intrinsic value. It's used in medicine, in electronics, in solar panels. It's not going to zero. Compare that to the risk of doing nothing. If you keep all your wealth in dollars and dollar-denominated assets, you're betting that the current monetary system can continue indefinitely. You're betting that governments can keep printing money without destroying currency values. You're betting that the debt can keep growing without consequences. History says that's a losing bet. Every fiat currency in history has eventually failed. Every single one. The average lifespan of a fiat currency is 27 years. The dollar has been a pure fiat currency since 1971, when Nixon closed the gold window. That's 54 years. We're already on borrowed time, and the abuse of the currency has accelerated dramatically in the last 15 years. We've printed more dollars since 2008 than in the entire previous history of the country. That's not sustainable. So the question isn't whether you should own silver. The question is how much and how soon. And my answer is, as much as you can reasonably afford, and right now, not next month, not after you see how the market develops. Right now, while you still can. Here's what I'm seeing in the dealer market that tells me time is running out. Premiums are rising every week. 4 weeks ago, you could get silver rounds for $3.50 over spot. 2 weeks ago, it was $5 over spot. This week, it's $6.50 to $7 over spot. That's not normal market behavior. That's a market that's running out of physical metal. The mints are rationing. The US Mint, the Royal Canadian Mint, the Perth Mint. They're all limiting how much dealers can order. When mints ration, it means they can't produce enough to meet demand. And these are institutions that can produce millions of ounces per month. If they can't keep up, what does that tell you about the supply situation? I'm also hearing about delivery delays that are getting longer. Order silver today, you might wait 4 to 6 weeks for delivery. That's up from 1 to 2 weeks just a few months ago. And I'm hearing whispers from inside the industry that some of the big wholesalers are having trouble sourcing metal. They're paying up to get inventory, which means those costs are going to get passed on to retail buyers. All of this is happening while the price is still relatively subdued. Imagine what happens when silver breaks $35 and starts making headlines. Imagine what happens when it hits $40 and the momentum traders pile in. Imagine what happens when it breaks the old high of $49 and every financial news outlet is running stories about silver's historic rally. The demand is going to be absolutely insane, and there won't be any metal available at any price. That's why this is a limited time opportunity, not because I'm trying to create false urgency, but because the market dynamics are creating real urgency. The supply is tight now. It's going to get tighter. The price is low now. It's going to get higher. The availability is limited now. It's going to become non-existent. If you're a stacker, if you've been accumulating silver for months or years, this is your moment to go heavy. This is the opportunity you've been waiting for. If you're new to silver, if you're just starting to understand why precious metals matter, this is your chance to get positioned before the big move. Either way, the time to act is now. Don't wait for confirmation. Don't wait for the price to start moving before you buy. By then, it'll be too late. The best opportunities in markets come when nobody's paying attention, when the asset is unloved and undervalued. Silver is both of those things right now, but it won't be for long. The stackers who are going to win big in the next few years are the ones who are buying aggressively right now, while everyone else is distracted by stocks and crypto and real estate. They're the ones who understand that the real opportunity isn't in paper assets that can be printed into oblivion. It's in hard assets that can't be created out of thin air. So here's my challenge to you. Look at your financial situation. Look at how much you have in cash, in savings accounts, in money market funds, money that's earning 4% or 5% while inflation is running at 8% or 10% in real terms. You're losing purchasing power every single day. Take a portion of that, whatever you can afford, and convert it into physical silver. Not paper silver, not ETFs, not mining stocks, physical metal that you can hold in your hand. Start with whatever makes sense for your situation. Maybe it's $5,000, maybe it's $50,000, maybe it's $500,000. The amount doesn't matter as much as the decision to act. Get some skin in the game. Protect yourself from what's coming. And then, as you see the thesis play out, as you watch the supply get tighter and the price start moving, you can add to your position. But get started now, today, this week. Because the opportunity that exists right now, the ability to buy physical silver at reasonable premiums with reasonable delivery times, that's not going to last. It's already deteriorating. In a few months, it might be gone completely, and you'll be kicking yourself for not acting when you had the chance. The stackers who understand what's happening, who see the convergence of supply deficits and monetary chaos and industrial demand, they're backing up the truck right now. They're buying everything they can get their hands on, because they know this is the opportunity of a lifetime. This is the setup that comes once every generation, and they're not going to miss it. Neither should you.